Hello, oracles and money lovers. We are trying something new today. Well, new for me. I'm trying to live stream. So let's see how this goes. So welcome everybody. We have finished up quarter two. This is episode 16 of Tesla Weekly. My goodness, 16 episodes. That's awesome. So Vin, how's it been? It's been a couple of weeks, a couple of vacations going on. So
Yeah, it's been a lot going on. Good to be back. And quick happy birthday to America. Happy
yes.
4th of July to everyone in the US. Yeah, so we just got Tesla's Q2 results. What'd you think? I thought that, if they had an exceptionally good and a lot of luck quarter, maybe we would have got 260. So we finished just under that, 254,000 deliveries, which all things considered, I think was pretty fantastic.
Yeah, I mean, obviously it was disappointing. We wanted to beat Q1, but reality is we've got to face the facts that Shanghai was shut down for a month. I mean, that was it. And the way I looked at it, and a couple of my subscribers had brought it up to me, was the fact that we basically lost 90 to 100,000 vehicles of production out of Shanghai, but based off of where we fell, we were really only 48,000 shy of Q1. So, yes, we would have loved to see growth, but at least we were able to more than make up for the 90 to 100,000 that we were short. And having the strongest June production on record really bodes well for the rest of the year.
Yeah, that's definitely strength, heading into the rest of the year here. And, even though from Q1 production was down, it still was up pretty significantly year over year. I was trying to pull up the numbers here. So Q2 of 21 delivered 200,000, and this quarter, what was it, 254,000. So at least year over year is still pretty strong growth, all things considered.
Yeah, I mean, year over year, I believe for Q2 was 21.6% growth, 46% growth for the first half. So we're still doing well. I actually did a full breakdown on all of the quarters that Tesla has had production and deliveries since the beginning. And because I was curious, because I've noticed a pattern where because of the exponential growth, the second half of their year sometimes equals the entire previous year. So I want to see if that's going to play out, because this year they would have to hit the 936,000 vehicles, which is doable. Whether we're actually going to get there or not, I don't know. But we need 839,000 in order to hit the 50% growth, which does not seem like an issue. Obviously, Shanghai can do whatever they want, but it sounds like Shanghai is going to stay open. So barring anything massive like that, I think we are going to see a very strong second half. We're going to see 50% year over year growth. And then even going into next year, can we still hit the 50% growth? If we hit 1.4 million this year, then next year we need to hit 2.1. And based on my projections, we should be hitting about a 2 million vehicle annualized run rate in December by this year. So, hitting 2.1 million next year should be no problem. Good day, sir. How are you? Quasi.
Definitely. Yeah. And just all things considered, going into this year, they had said that with Fremont and Shanghai alone, they could have hit that 1.5 million mark, giving them the 50% growth. So, when you factor in Berlin and Austin, they're going to take a little while to ramp, but it should be, I think we'll get back on track here. I mean, last year, 87% growth year over year. Once those factories ramp, which we're starting to see some significant progress, I think we'll definitely get back to hitting that 50% on average annual growth.
Oh yeah, and the things I looked at too were, thinking about the last 2 years, especially this quarter in particular, the amount of headwinds we have been facing are insane. I mean, and we still, until this quarter, have been able to beat expectations every single quarter. So this is the first one that we have not been able to do it. And even so, we made up a significant ground. So I'm just waiting to see what Tesla can actually do when they don't have these kind of headwinds that they're facing.
I'm really interested to see tomorrow. I'm sure we're going to see the headlines. Tesla's growth slowing, competition's here. They're not hitting the growth marks, but yeah, it's a little hard to deliver cars when your most effective factory is shut down for months at a time. I am interested to see the Q2 results. I'm assuming their profits or margins are going to take a little hit, because I'm sure a lot of, they've been doing all these price raises, but we have to remember that these cars, the price raises probably don't affect the cars for this quarter. So, and all the supply chain logistical issues probably will eat into their profit margins a little bit. So I wouldn't be surprised to see it dip below 30%. But I think Q3 and Q4, barring any more major lockdowns, and if Texas and Berlin can continue to ramp, I mean, the sky is the limit. I think that there's still a chance probably to hit that 50% growth rate.
Oh yeah, well, and I think that vehicle margins are still going to be high, and I did a little math on it, based off the S and the X, which obviously we know are the higher end vehicles. Those two were just under 5% of their sales for Q1. They were over 6% of their sales for Q2. So it's not a huge number that they have, but that's still extra dollars that are going into the vehicle margins themselves. And then with autopilot coming on, that's going to get lumped into it as well. So we could still see relatively high vehicle margins, but operating margins, I think, are going to take a massive hit. I don't think we're going to be anywhere near 20%. If we can hit 15%, that'd be awesome. But I'm pretty sure that's going to definitely take a hit. But that was expected. We're ramping two factories at the same time. We saw the exact same thing happen when Shanghai was coming up. So the way I look at it is, going forward, yes, we're taking that hit now. But now, as soon as we get to any expansions or any new factories that have to ramp, we're going to have these three factories now plus Fremont to offset anything that are coming out of those. So seeing, ramps in the future, I think are going to be negligible hits to the bottom line.
Right, and it'll be interesting to see how that you mentioned, like, the autopilot tier now is what, $6,000 for that add-on, to see if maybe they could eke out some more profit, a couple percentage points there. Maybe you do get some people who didn't want to pay the full 12,000 because that's a lot, but still to get some of these other benefits from it. That could definitely help too, kind of having a little tiered subscription model almost.
Oh yeah, and then going back to your comment about the vehicle prices to offset. Yeah, the vehicle price increases that they came up with in Q2 probably won't hit the bottom line until, probably Q1 of next year. But all the price raises that they had for basically, I would say October and November of last year are now coming through right now. So the vehicle price, for me, I've got them at 53,500 for an average selling price. It could be significantly higher than that.
Yeah, if they can turn a profit, you really just got to get through this year. I mean, this has just been such a lost year with everything going on. I mean, it's like it would be a miracle and incredible for, like, a lot of companies to come out of this year, in a better position. And I think Tesla will be one of them. So I think that this is probably going to be the toughest year, obviously, with all these challenges we've had to face with the lockdowns and the supply chain issues and inflation. I mean, the one saving grace that they do have is that they have that pricing power. The demand is there when you're sold out through the rest of 2022 before we, really got into this whole mess, and wherever it goes from here, they can only, they can only sell these cars as fast as they can pump them out. And it'll be really interesting to see, 2023, 2024, what happens there if that demand does start to slow down. We'll just have to see.
Yeah, and the video I posted just before we went on live, I was talking about that, and it's like, when it comes to the pricing power for Tesla, because they've got 30% margins on their vehicles, coming down. So yes, they're going up on their prices because they're trying to keep demand in check. So now when we get to a point where maybe it's the end of 2023, beginning of 2024, maybe we see demand starting to wane, they can just bring the prices down. Because they bring the prices down, that's going to bring demand up. They have such control over demand right now when it comes to pricing. And don't forget, if they bring their prices down, that's going to make them more attractive as a vehicle over competition that people may be buying strictly based on price. And now all of a sudden, if competition wants to undercut Tesla, they have to take even more of a hit because they're not profitable on their vehicles yet.
Right. And and hopefully by then the money furnace will be turned off at Giga Berlin and Texas. It's funny. Speaking of competition, I just was walking in the park and saw a Chevrolet Bolt. It literally looks like a little Lego car. And I know that's GM's only hope now is to sell this cheaper. I think they're going for like 20,000. Try and undercut Tesla, but I think people are going to be picking the iPhone over the BlackBerry for sure. Another thing that's really interesting is that, Tesla stock now has basically been flat for 18 months. We're back to where we were, this time 2021. And in the meantime, they've constructed and begun ramping two of the world's largest and, I think soon to be most profitable factories, while at the same time making tremendous progress with full self-driving, which is going to increase the value of every car exponentially. And we've got, a potential humanoid robot prototype coming in September. So it smells like opportunity is in the air to me.
Oh yeah, absolutely. I mean, I'm looking at the fact that it's like putting a guy in a man cave. You put him in a man cave, you don't see him for a while, but what he's doing in there is eating right and he's working out and he's going to come out this jacked man on the other side. And that's what's going on with Tesla right now. And actually, I got Jim here popping up. So I didn't even see that, Jim. Great call on this one, Gary Black. I thought, based on my calculations, that Tesla was at about 130,000 vehicles produced for June. And so Gary's saying, 157, that's significantly more than I thought. So now for me looking at it, how much of that was sustainable? Because, we know that they had some massive pushes. A bunch of my subscribers brought up a great point. They may have had a bunch of vehicles already built and ready to go in Austin, and they were just waiting for the 2170 tooling to come over to pop the batteries in. So they may have an extra push there. But, even if you pull that down, a little bit, pull it down 10%, you're still over 140,000 vehicles, probably as a sustainable ramp. So I know we're going to have some downtime in Shanghai in July. We got some downtime for Berlin that we just found out about today. That's going to go on in July. But both of these downtimes are so that they can upgrade their systems to be able to produce vehicles even faster. So looking at the fact that we're at, the 157 right now, getting to we might hit by December. If this keeps up, we could be well over 2.1 million run rate by December.
And it definitely bodes well that June was their best quarter ever. So hopefully some momentum can carry over to the second half of the year here, where without and without that Shanghai lockdown, this quarter would have been a different story. Another record quarter, that's the only comes down to.
Well, you think about it, because based on 254,000, and maybe if they didn't have the Shanghai lockdown, they wouldn't have pushed as hard as they did at the end of the quarter. So maybe they would have pulled out at 245,000, but then you tack on the 100,000 that we were missing from Shanghai for the month. We're still looking at, record quarter of 335 to 345,000 vehicles delivered and produced. And, that's still nice growth. So again,
once those Shanghai trades are done, I mean, it'll be down for a few weeks, but they're talking about producing 2,000 vehicles over there. So Shanghai alone now can get at 1 million mark, and then you have 3 other factories.
Yeah, I mean, and this is where I'm looking at, now they have the 2170 up and running over in Austin, they can, not that they want to take their time with the 4680s, but it's not like they're going to be burning as much cash as fast because now they at least have vehicles coming out of Austin to offset any ramp costs that they have. So they've got this going. They can move this forward. They can start cutting down on this. So I honestly don't know. I would love to go back and take a look. If any of you guys in the comments happen to know where it hit Shanghai the most when it came to ramp costs, whether it was the first quarter or the second quarter of them in actual production. I would imagine it's the first quarter because they're not producing basically any vehicles. So they have a lot of costs up front. So that's my guess, is that's going to be Q1. But if you guys happen to know, let me know. But that's what we're going to see what's going on here. We've been through the first quarter, which is probably the worst. So the next quarter, that we're going into for Q3 here, we'll start to get that balance. And I would imagine by Q1 of next year, we're going to be definitely, pushing much higher for that and then offsetting. And probably by the end of 2023, we've become profitable as a factory.
Yeah. As far as catalysts for the rest of the year, what do you think? I mean, we've got the stock split coming up, obviously 3-1. What do you think they're going to show on AI Day?
So my thoughts for AI Day, we know that Elon's already said that they're going to be showing a prototype. That's their plan for Optimus. Obviously, this is a huge recruiting event that's going on. I'm wondering if they're going to unveil the next steps of Dojo. I'm guessing that's what they're going to have there. And then Elon did say that there's other surprises. So I don't know what else they're going to have for AI Day. Just thinking about how they're trying to entice engineers to go there, they just laid off 200 labelers. So the auto labeler has obviously become better because they can afford to lay these people off. So, maybe they unveil FSD 11.0 finally.
Yeah, and I mean, they said that they're going to have a working prototype of the Tesla bot, and I'm just trying to think like they could have. I mean, if they have something that doesn't even need to be Boston Dynamics level, but just a basic robot that can just pick something up and put it down. I mean, that would be incredible. And in a good amount of time, you can just kind of project out. They could be, the factory seems like the logical place to start, where they could. I'm so much of their factories already automated, but having robots that can carry stuff around. I mean, I've been covering another company called Symbotic. It's actually pretty interesting.
Oh yeah, I meant to check out that video that you just put up.
So
Yeah,
they're
yes,
involved in.
yes, Wes. No Halloween costumes this time. It should be the real deal.
Yeah. Hopefully not like a Dan, but an actual robot would be nice this time. But this custom Botic, that's really what they do. They're all house factory automation, and humanoid robots that are basically little trucks that are either camera. Some of them are on track, some of them are not, and it's just made the factories so much more efficient. You're to get to stack goods, shelve it all the way up to the ceiling, and just more automated, efficient system in place. And Walmart just picked them up. They're going to be using them for all 42 of their regional distribution centers. So that stock was going up. That news, and that's been volatile with the rest of the market. But I could see the application start with Tesla. Just further cut down costs of the factories. They can take it from there. I mean, there's limitless possibilities for capability for that Tesla ball.
Oh yeah, and obviously that's the first thing that I thought of when it came out. Obviously, yes, it's great thing about the future. We're gonna have iRobot and these things in your homes, like in Alexa. But reality is, they're gonna have it to help them out in the factories, and it's gonna be very similar to what Walmart's gotten. I mean, this is what it comes down to. When you've got manufacturing going on, you've got to cut costs as much as possible and be as efficient as you can. And anytime you can get automation or something of a robot to be able to help you with that, it's going to be beneficial and cost saving. So going in the future, that's exactly what's going to end up happening. Was the better robots that are going to be out there, the more companies are going to pick them up. So if Tesla can really truly solve this AI piece of it, to have robots that are way more functional in a factory setting, it's just going to help them out that much more, and be huge for the future.
Yeah, I was talking about this yesterday at a barbecue with some people, and hopefully the end with the robots will be being like robot you mentioned, and not Terminator.
Yes.
We're
Let's
walking a fine line.
And even as Elon said, he's like, there needs to be a regulation, some sort of regulating board to oversee this, to make sure that nothing like that happens. Of course, there could be corruption all over the place to do who knows what. You could think the worst of it all, but at least the intentions are there to be positive. Let's see here, Mick. Yeah, macro trend reversal. So my thoughts on this, and I'm still holding to it, is September. And I said it from the beginning of the year, because we've always seen things in the past where the market magically turns around for whatever reason. And just looking at the fact that we have a midterm election coming up where the Democrats are looking to be losing seats because of how things have been going for the last 2 years, I have a feeling we're going to see this magical reversal happen sometime in September. And just timing wise, looking at the fact that we've got inventories building up, and we've got a bunch of earnings that are going to be coming out. So we're going to be probably hitting an earnings recession coming. And then if we do hit, negative GDP for the end of July, now we're in a recession. So that would be a signal for the Fed to be like, oh, we don't really want to cause a worse recession, so let's back off a little bit. They'll go a little more dovish. And then if somehow the oil prices seem to come down and gas prices come down, we could actually see the CPI drop a little bit. So if we see CPI also come down in August, that would lead me to believe that we're going to see a much more dovish stance from the Fed. And then we're going to hit mid-September and see that reversal. And the Fed may even say, you know what, we're going to stop and not even do any more raises for the rest of the year. And if they say that out loud in September, we're going to see a nice rally into the end of the year.
Yeah, I could see that. And I think the other thing to watch out for is consumer spending, because right now I think we're good through the summer. This is like the last thing that's holding us up from like a complete collapse, is that people have accumulated a lot of savings the last couple of years as a result of the stimulus checks, and they've been on house arrest for 2 years, and they want to get out and they want to travel. So I think there's no there for this summer to see people spending heavily on travel and different type of spending, less like Home Depot, Visa. But I think, like you said, come September, we could kind of have a better read on the situation, and if it's starting to turn around or if it's really going to keep, going, getting worse.
Yeah, and obviously, we're not going to get the true turnaround into a bull market until the Fed says, all right, we are done raising rates for good, and we've gotten inflation down to that 2 to 3% that they want it to be at, and interest rates are going to be between 2 to 3%. So we won't see a true turnaround in a bull market coming until we get to that point. But if the Fed does say that they're going to stop raising rates, we could see a nice rally until they, kind of resituate some things as well. But yeah, I've seen the same thing with the spending is travel. And even myself, I've been, going out to do more traveling. But even with that, I'm like, you know what, I'm pulling back to make sure, because if we get into a recession, we want to make sure. Plus, I want to buy a house. So I've got that savings going. But the spending, like you said, there's a lot more spending going into, the travel type of things. But when it comes to retail type purchases, that spending is not there. So that's why we're seeing like the Nikes coming down with, an earnings recession coming in. We're seeing a lot of other companies saying that spending is down. Looking at the company that I work for, our sales we're crushing sales. We're blowing things out of the water. But then you have to factor in all of the price hikes that we've had with all of the inflation, because I have noticed that our foot traffic is significantly lower than it had been before. So yes, the dollars could show that you're doing well, but that could also be just because of price hikes and inflation versus actual foot traffic that's coming in. Because as soon as those prices come down, if you don't have that foot traffic anymore, then your sales are going to really be hurting.
Yeah, it's it has been really interesting to see with the retail, because one of the stocks I look at for when the times get tough is TJ Maxx.
Yeah.
And surprisingly, that's one that good times and bad, I mean, they show you in their investor presentations that in all the recessions, it kind of outperforms the broad market. But this year, it's down 25% year to date. So even worse than the S&P. And yeah, it's just because, like you said, people are just not spending on retail anymore. If they have money, they're spending it, on travel and different spending patterns than what we witnessed the last couple of years.
Oh yeah, and going back to what Kathy Wood had said last year, she's like, it's not just retailers that are stocking up on inventory; it's homeowners. People went out. Look at the whole toilet paper thing and everything going on.
I was going to say that, yeah.
Lots of people went out and they just bulked up on a lot of goods that they have at home. So now not only do they have these goods at home, but that money that they would have spent on them now, they don't have to spend. So they have extra money in their pocket because they already spent it up front. So whether they put that, stimulus checks money into savings or into, goods that they're going to use around the home, it just means that they have more cash and money freed up now to go and do that travel or just save.
Nothing will ever top the one conference call when Elon was talking about the toilet paper frenzy, and he said like something like verbatim was there wasn't an enhanced need for ass wiping, but people went nuts and they cleared out those TP shelves. Like that's like the least of our problems.
Yeah, seriously. And it's just the masses that are out there and following things like that, and maybe that's what's going on with Tesla. Everybody's going out to buy Teslas right now because they're all concerned about what's going on. I don't know. It's man.
Best air quality. They got the fence mode.
Oh, I know. Let me see here. Jack, price targets for end of Q3. Ooh, I have my price target for the end of this year. I've got to update it because mine is a 12-month price target of 1267. Q3. I'd have to take a look at that. It's Jack. Yeah. It is so hard because end of Q3, we're looking at end of October. And with the election right around the corner, it could be so volatile. I mean, historically, Tesla has done very well through Q3 and Q4. So I can see potentially, because we're going to get numbers coming into beginning of October 2nd, we'll get the delivery and production numbers for Q3. And if those numbers do come in at, if they hit 400,000 for deliveries for Q3, I mean, we might be pushing $800-900 depending on the macro. But again, it's all macro. There's really, I don't think Tesla's going to outrun the macro environment until probably next year.
I was watching a Jack Bogle video, and he said it perfectly. It's like you said, it's all the macro, because Tesla could grow 100%, and if the macro hasn't turned around, the stock could drop another 50%. I mean, anything could happen here in the short term. And Jack Bogle's whole spiel is just saying, market down 25%. In the short term, nobody knows. It could go down another 5%. It could completely reverse, and that's why we just dollar cost average, and gotta just stay the course.
Oh, I know. And the way I look at it is, when you're a long-term investor and you're in it for at least 5 to 10 years, like we're here and the stock's going to be up here, but along the way, it's going to do this getting there. So, that's why in 5 years, the average median price for the year is going to be higher than we are now. But along the course of that year, it can fluctuate significantly, as we've seen.
I've been reading in the Wall Street Journal. I think this is a sign of the bottom. I've been so many articles now. What they're pushing is, now's the time to buy oil. Now's the time to buy value. Everyone all of a sudden is going into these value stocks. The value stocks are more overvalued. I was looking at a comparison the other day. I think someone tweeted, Johnson & Johnson and Procter & Gamble and company have higher PE ratios right now than Apple, Google, obviously Meta, because they've gotten completely clobbered this year. But it's just crazy to me. And I was like reading all this. I'm like, you know what? This smells like we're pretty close to the bottom here. And you got guys talking about value is about to go on a multi-year run. Like, I think that this is growth is either bottomed or we're getting close.
Oh, I know. And it swings, and this is just the cyclical swing that we go through all the time. And, eventually, growth stocks will come back, and growth stocks are going to have their day. And again, that's going to be as soon as the Fed decides to U-turn. And then we're going to see, the growth stocks come back, because when you're in the bear market that we're in with interest rates going up, it is not good for, high PE stocks and, anybody with high multiples. It's just not reality. Let's see. Elon's still going to buy Twitter. Yeah, he's going to buy Twitter. That's, that's coming. And honestly, Elon's silence, and you guys can let me know in the comments here. I'm curious what your thoughts are on this. My thoughts for Elon's silence was he was just all hands on deck, focusing on finishing the quarter strong for Tesla. And that was it. And then, we saw he was out hanging out with the Pope, because that's what you do when you're Elon Musk. But, I have a feeling that he was just quiet because he was just, focused, just tunnel vision right on finishing up the quarter strong. And now he's on vacation with the family. So that's my thoughts. But I know I've heard many other things about he was checking things with Twitter and figuring out what was going on there. What do you think, Vin?
I'm with you. I think that it was that end of the quarter push. He was probably on the factory floor. I think he was, busy with that stuff. But he did have some time to meet with the Pope. So I think it's more he was focused on finishing the quarter out strong.
Oh, yeah. I mean, even Jonna Kreider had her interview with him, and she was there. I think it was like the Friday or Saturday before. It was like right after he had gone silent. So, and he was in Austin. So we know that he was there in the factory. So I have no doubt that's where he was. Whether he was doing other things involving Twitter as well, who knows? Elon's a guy who seems to have way more hours in the day than the rest of us. But
it was eerily quiet week, though. Just not the same. No excitement on Twitter without this guy tweeting all the time.
Oh, I know. It was so funny though, because like the people who complain about what he has to say were also the people complaining that he wasn't saying anything. So like, some people just want to complain. You know what?
He can't win. Yeah.
Each their own. Whatever. Do your thing. And that's why Elon's like, he's just going to do his thing and whatever. Let me see.
Yeah, I think he's earned the right to share his viewpoints on things.
Let me see what else we got. Jim.
Cybersecurity is another really interesting one Jim brings up here. Yeah, over the next decade, I mean, and especially, you want to talk about autonomous driving, the need for cybersecurity is going to skyrocket. I think we're already seeing that. There's a few interesting companies in that field that definitely poised to do pretty well.
Yeah, yeah, and I know. I mean, even heck, 2 years ago, I think it was Jerome Powell was talking about how the importance of cybersecurity going forward, because if we're going to get to any sort of World War III type situation, whatever, it's all cyber stuff. I mean, heck, look at Ukraine and Russia and how much Starlink had to jump in and play a role over there in just that.
Yeah, that
Um,
whole thing is crazy. Like Starlink, I wonder if we'll ever really know, but Starlink may very well have turned the tide of that war, because that's Russia's whole motive. First thing they do, go in, shut down, communications, the internet, and jam all the comms. I mean, you can only last for so long. If you have no effective communication lines, you're not going to be able to mount a effective defense. And I have a feeling that Starlink and maybe a little Palantir help too really gave Ukraine a much better odds.
yeah, I'm curious as to the Palantir, and for me, Palantir, I don't even know how many shares at this point, but I'm still sitting on it. I've been hearing so many good things. 2024 is the year, and I was like, it's fine. I don't have a ton of money into it. Most of my money is in Tesla anyway, but it's one of those plays where, what, I'll ride it out. I'll see what's going to happen. It sounds like there's a lot of promise, and we'll just see how that goes. Plus, being as it is a high multiple company that's not doing well right now, to me would be the time is looking at the companies who have high multiples that probably won't go under if we hit a deep recession. And those would be the ones that I would want to take a gamble on if I was trying to do something like that. And I'm more of a long-term investor, but looking at now would be the time to buy these high growth stocks. And those high growth stocks are they going to go bankrupt or are they not? And if they don't, chances are they're going to come out and they'll do well on the other side. But obviously, this is why Tesla is my number one pick, because they're a high growth stock and they're going to do very well coming out on the other side.
And it's, there's a lot of similarities between Tesla and Palantir, and both of them have no debt, strong balance sheet, and yeah, they can ride out the storm. I mean, Palantir, both companies, but Palantir really took doomsday steps heading into 2022. They're buying gold bars. Everyone else is buying Bitcoin. I thought that was digital gold.
Yeah.
They really so those two companies will definitely make it through this. And then, yeah, anyone who can survive this, once you get to the next bull run.
Oh yeah. I mean, I was on the Bitcoin train myself, and I do own some, but cryptocurrency is less than 5% of my portfolio, so I wasn't horribly concerned about it coming down. But yeah, I think in the future, I think Bitcoin will fare well and be similar to the digital gold that's out there, but it's too early on for it now. There's not enough regulations behind it, and that's where like a lot of discussion comes up when it comes to cryptocurrency is, is regulation good for it or bad for it? And looking historically at everything that we've gone through, regulation is always a good thing, because regulation gives a better sense of security for what's behind that product itself. And this way, institutions feel more comfortable getting into it. Big money's not going to get into something that is going to be absolutely wildly, volatile, unless they're just playing gamble plays on it. So they're not going to get into it as a long-term steady play. Just look at Tesla alone. There's a lot of institutions who won't buy it because it's still not investor-grade credit rating. And so,
Yeah,
once they've proven themselves, then big money will get into it.
it's been pretty scary to see what's been going on with crypto. And I'm a big Voyager digital guy. That's where I'm like you, 5% or even less of my portfolio I put into a few crypto, and I have most of it is on Voyager. And I'm watching all these companies that are facing potential bankruptcy and all kinds of issues. And then I think it was on Friday, it was July 1, Voyager comes out too now, and stopped everyone from withdrawing their crypto. And they were exposed to that AAC hedge fund that is going under. They had a huge loan that they had given to them, something like or 700 million in the form of US dollar coin and Bitcoin. But it is scary. It's just scary to see like how quickly, like that whole, it feels like just yesterday, Bitcoin was at 69,000 and everyone's saying it's going to 100. And now here we are. And it just goes to show you, like, at the end of the day, it's all just very speculative to me, because all cryptos, they don't produce anything, they don't have revenue. So once people, lose interest and lose that belief in it, I mean, at least with real companies or Tesla, you have fundamentals at the end of the day. We have delivery numbers, we have revenue, and it depends on what the market wants, what PE ratio that they want to assign to it, Mr. Market. But it has been scary to see with crypto, and even something like, I had a good amount of money in US dollar coin, and I just by chance happened to withdraw it about a week ago because I saw all this stuff going on. I was like, you know what? We're looking to put down a down payment soon. I don't really want this money to get locked up in here. And I just happened to withdraw it. And not a week later, they have now, blocked all withdrawals out of Voyager Digital, which it's just insane how quickly these things are seeming to fall apart here.
Oh, I know. And like, I look back and I wasn't investing during the dot-com bubble, but part of this seems very reminiscent based on the stories that I've heard about that. We're seeing all these companies, crypto took off, and now we've got a lot of companies who are involved in cryptocurrency who are falling like dominoes, like crazy. And I have no doubt, cryptocurrency, I think, is going to do well and come out of this. I think it's going to be something that we deal with going forward and work with, and we'll get the regulations behind it. But a lot of these companies who are involved in cryptocurrency, we're going to have a few survivors that come out of this, and those are going to be the ones like the Amazons, that come out of it. It's just a matter of who is it going to be? Is it going to be Coinbase? Is it going to be BlockFi? Is it going to be Voyager Digital? And you're not going to know until we get out of it.
It definitely, yeah, it does seem very reminiscent of the dot-com burst. And, I think what ultimately is going to happen is, crypto's not going away, but you've got hundreds of coins right now. Maybe 10 will actually make it, or, be worth owning, and provide some utility use cases and value at some point. And that just goes back to my whole viewpoint on the industry. I know a lot of people, the whole real point of Bitcoin, you want to put it in your own private wallet. But the way I see it is, the average person who's going to want to buy these, they're going to have to buy it through something unless brokerages get involved. So what are your options? You've got Coinbase, you've got Voyager Digital. So I'd almost be more comfortable at this point owning those, because like I said, I think 10 years from now, maybe there's 10 coins and that's where you're going to buy them. And I'd rather own the brokerage than, be buying all of these random coins, that majority of which probably will cease to exist.
Yeah, and when it comes down to crypto, right now, as far as I can see, crypto is still being traded as a security rather than some store of value, and that, I think, is where we're stuck right now. And I know Elon is pushing for Doge, and they accept Doge for Starlink and Tesla for merchandise and stuff. So I think over the next 10 years, as we get to a point where cryptocurrency is utilized more as a form of payment and then a store of value, once we get to that point, then we'll see a lot more stabilization of it, and it'll be viewed more like the dollar or gold. But until then, it's going to be trading like a security, and it's going to be trading like a high growth security. And again, I thought for sure that Bitcoin was going to be some, countermeasure to inflation, and I was totally wrong on that.
Yeah, it's just traded like a speculative asset, and the market goes up, Bitcoin goes up, market goes down, Bitcoin goes down a lot.
Yeah.
And I mean, Tesla's got some Bitcoin, so we'll see how that looks on their balance sheet this quarter.
Oh my
Just
God, yeah,
going to add insult to injury,
it's
but
gonna be brutal. Jim, actually, this is awesome. So knowing that Tesla now has Starlink that can go into RVs, my thought, and I don't know if they're going to do this, and I really hope they do, when they come out with the Cybertruck, I'm hoping they have a Starlink Cybertruck package, because that would be the one I get without question. So I don't know how it works. I don't know about monetizing it. But as far as I can see, obviously, if Starlink is going to get put into any Tesla vehicles, I would imagine Tesla is probably going to be buying Starlink. So it's going to be money out of Tesla's pocket, but it'll go into Starlink's pocket. So this is why, a lot of people discuss all of Elon's companies, how they do help each other out. And I can definitely see that happening. I mean, look at the Boring Company. You've got tunnels that are designed for Teslas to go driving in. So in one way or another, all of his companies help each other out. And I think getting Starlink into vehicles is going to be huge, because I do have a feeling that in the future, we're going to see Starlink in every single Tesla that comes out.
yeah, they work off each other. The employees can really have a level of freedom to choose they want to work, do SpaceX projects and Tesla. It is really cool. I mean, this is the first time I think we've ever had a system like that. And I think that's why you see so much efficiency and just the most effective companies we've got. It's why they're progressing so rapidly.
Oh, I know. And yes, Carrie, I agree. Starlink should be a publicly traded company. And I
Yeah,
think we might see it in 2025. I
a couple
think
of
that's
years.
what Elon was alluding to. So I think we'll see it come and be public in 2025. And ironically, maybe that'll be right around the time that they announced that Starlink is going to be available in every Tesla if you want it as an option. That's, I think, totally viable.
That would be nice. Yeah.
Let's see what else we got here. For crypto, straight. Yeah, and I think a lot of people talk about, us going into this new world order and this revolution that's happening and whatever. And I think the world is converting over to all of this. And I know Sandy Munro had alluded to it when he made a video a while back about when they switched from horse and buggy over to, cars now, and then the Industrial Revolution. And a lot of people who were just so against changing for the future that they would go out there and put out slander stories and everything to combat this change that's going over. And that's the pushback that we're getting from all of these people who, these industries that are out there right now, legacy auto, oil, everything that's old. I mean, even hearing about people who are talking about, how dirty it is, like EVs aren't as clean as oil vehicles. And I'm like, well, what do you have a choice of? Like, it's like, well, the vehicle itself is definitely cleaner than an ICE vehicle. I go, but the grid is dirty. So are we going to just not upgrade our cars to a better system just because the grid is old? Why don't we just upgrade the grid? And that's basically what Elon and Tesla are looking to do, is completely change over and upgrade the grid and make that cleaner. So in the
Right.
long run, down the road, we're going to have a much cleaner vehicle on the road and a much cleaner grid behind it supporting it.
That's what always happens. You have to have the product first, and then the infrastructure that's required will follow. I mean, go back to the Model T with Ford. Everyone was like, that's crazy. There's no roads. Where are you going to drive it? Horse and buggy is going to be here forever. And 5-10 years later, we know how that played out. And I feel like you're going to see the same thing happen here. Another thing that I was just thinking about, you had mentioned, other companies' earnings are going to be brutal. It'll be very interesting to compare Tesla's earnings to all the other auto companies when they report. And, I would place a wager that Tesla is going to be one of the few, if not the only, that turns a profit, at least on their EV electric vehicles.
Yeah, that's a great point. Thinking back to Q1 and how, they were bringing in more profits than GM, Ford. I think VW, of the legacy automakers, I think VW was the only one who actually beat Tesla in profits. So now let's see how Q2 is going to roll out, because yes, Tesla took, obviously their big hit. They didn't, exceed Q1 numbers, but can their profits still exceed all these legacy automotive makers? That's going to be a huge one to watch too. I will definitely pay attention to that.
I know Lucid, I think, delivered 100 cars or something this quarter. That's what they're on track to do. So,
well, and GM, don't forget, GM's putting out 12 Hummers a day. Unbelievable.
They're leading.
Rob, Catalyst.
That's
what
a
do they
good
need?
question.
So
Wall Street is money. They need to see revenue growth, and that's it. They don't understand anything until it's producing money. So full self-driving, until it's producing.
They'll believe it when they see it.
Yeah. Same with the robot. They want to see application and revenue from it. So whenever we get that.
Yeah, which is silly, because when it comes to Wall Street, when legacy auto talks, they'll listen. But when Tesla talks, they'll like, show me the money. And that's how it comes down. So yeah, I think it's, Wall Street needs to see things. And the big one for Wall Street too is going to be that credit rating. As soon as the S&P upgrades Tesla to investor grade credit rating, that's going to be a huge catalyst right there, because now institutions who will strictly only buy investor grade ratings equities will then jump into it. And then, if after the split, we get to a point where Tesla does get included into the Dow, that I think will be the top two pieces that will make Wall Street feel better and will stabilize the stock. and then it'll go forward from there. And then obviously if Tesla can show, yes, we have 50% year over year growth, then Wall Street will be like, okay, well, that's the real deal. And as soon as they start overtaking some of legacy auto for real, then that'll be it. And I don't know if they have a specific number in their head. I don't know if it's like, hey, Tesla needs to deliver 2.5 million vehicles a year before we really truly see Tesla as that company that for the future. I don't know if that's going to be a huge piece, but definitely the investor grade rating, showing their profits, and then just show them the money. Like, hey, here's Optimus, here's what it can do, here's what it will do, here's the numbers that it's going to generate for revenue. Boom, done.
Show me the money. And
Yeah,
Tesla's still got
FSD is
76.
a big one too.
Yeah, definitely. Tesla still has 76% of the U.S. EV market share. GM not even in the top 5 with their leading.
Yeah, and I mean, just looking at how far behind everybody else is, and Pi phone, Stephen, I have heard very little about it. I know Elon himself said that putting out a mobile phone is backwards technology, but I think for him, it's based on what we know currently as what a smartphone is. So for him, I think it would be, if they're going to come out with it, it's going to be Neuralink tied. And once they can figure out Neuralink, it would be sort of whether you'd even need a phone or not, or whatever device it's going to end up being, will be tied to your own brain. So you wouldn't have to type anymore, because that's Elon's biggest pushback, is the thing that slows communication down in that manner is the physical act of typing. So if your brain can think it and it can go immediately onto this and out, I think that is where we would go in the future. So whether it's in phone version or an Optimus robot or whatever it's going to be, I don't know if the Pi phone itself is real, at least in the smartphone factor that many people think it will be. Let's see. Quasi, reasonable worst case PE for Tesla, probably 20 or 30, I would think. If we hit a recession that's bad, probably 20 or 30 would be a worst scenario.
It's at 92 right now. So
yeah,
that would be, stock could be $200-$300 if that were the case.
Yeah, and then that's, the lowest numbers I've heard are 250 to 300. A lot of people are saying 4 to 450. So yeah, I think if we get into a deep recession and we continue to pull back further and we get a crash that some people are talking about, probably 20 to 30 would be a reasonable PE.
I think it would be a little higher, maybe 40 in a worst case.
And don't forget that when it comes to PEs, looking at the high growth stocks that we have, because many of them are not profitable, they have an infinite PE, which makes it really hard to figure out what they are. And Tesla was there just a couple of years ago. So when you get into a situation where we have right now with rising interest rates, trying to figure out what a PE is for on a growth stock that's infinite and not profitable, it screws everything all up entirely. But when you have a company like Tesla, who is growing significantly quarter over quarter, that PE ratio changes drastically. So if they do, for some reason, pull down to a 20 or a 30 PE, you go one quarter into new earnings, and that 20 or 30 PE can now be 10 or 15. So the stock will react immediately to it because it's growing so fast. Because when you put a value type PE ratio on a high growth stock, and you see that high growth come in a quarterly earnings report, it throws everything out of whack. So the stock immediately has to jump and go back to a 20 or 30 PE. Let's see what else we got here. Rob.
Which automakers are going to make it? I think the way things are today, and who's going to be competing with Tesla, unless we have a serious change in some of the legacy incumbents here, right now it's Tesla and VW, and that's it. They're going to be the only ones with a meaningful chunk of the EV market.
Yeah.
If everything stayed constant. But I think what we'll ultimately end up seeing is Tesla with somewhere between 10 and 20% of the market. And that's all they need, because that's all Apple has of the phone market. And, we know how that went. Tesla's going to have all these other products, and that'll justify, becoming the highest market cap company in the world, is my belief.
Yeah. And the way I look at it too is definitely Tesla. VW, I think, is going to do well. Ford, I think, is going to be fine. And the reason Ford's going to be fine is because Ford, at least recently for the last 10, 15 years, Ford's never been hey, we're going to be the best type of company, despite, yes, they have said it about EVs. But realistically, Ford's like, you know what? We're in fourth place and we're super happy with fourth place. They're one of the only two companies who never went bankrupt in U.S. history. So, Tesla being the other one. So I think Ford is going to be fine coming through this. They're not going to be the leader by any means, but they're going to get through this very well.
Ford has a good niche there. It will be interesting though when the Cybertruck comes, how big the waves that makes are, because I think that'll determine Ford's fate. If
Yeah.
if the Cybertruck just appeals to Tesla people, and then you've got the traditional truck people who will always be loyal to Ford. But depending on how good the Cybertruck is, I think that could be some trouble for Ford. But they definitely have a few years. They'll be fine.
Oh yeah, and I think when it comes to the Cybertruck versus the F-150, it'll be functionality, because obviously, with looks of it, some guys are just gonna be like not gonna buy it because they don't like the look of the Cybertruck. But if the Cybertruck comes out and is truly significantly more functional than the F-150, and the price isn't that much more, guys will end up going with the Cybertruck, because when it comes to business, you're going to buy the best bang for your buck. And if you can buy a vehicle that's going to be a generator as well, included in all of this, then there would be no reason to not buy it. And I believe the F-150 does have that functionality as well, which is awesome. And I'll learn myself, because in my line of work, I deal with contractors all the time. So hopefully within the next 2 years, we'll see how the Cybertruck coming out, and maybe I'll get some actual true feedback from these guys as far as how it's working for them. And then the Chinese automotive makers as well. So, the Chinese automotive makers, I believe Sandy Munro is spot on there. And Elon has even said it himself. The Chinese are doing very well. The Chinese, I think, are going to end up being like the Japanese automakers were back in the 70s. And they're going to take over. And Chinese are doing a lot of things over there. We don't hear a lot about the truth of what's going on over in China, but they are significantly further ahead in the EV market than many people understand.
And they've got the key to it all. I mean, we got to get our act together with the battery resources, because they dominate not only the resources, but the refining process, which we are years behind on, which
Yeah.
not very strategic. That's gonna be the next big issue. I mean, right now, basically have the oil wars, and if we have issues with China, I mean, that's gonna be trouble with the batteries.
Yeah, and I mean, and we've got Tesla buying batteries from BYD over in China, which I think is a great thing. Partnering up with them, it's good. Tesla, and I know people have, issues with Tesla over in China, because you never know when China's going to lock down for whatever reason. And so when you get into situations like that, but Tesla having a good relationship with all the automotive makers that are over there and partnering with them, that tells me that there's a strong future for Tesla there. And even Elon himself said, they're looking at 25% of their business is going to be in China in the future, which is, a quarter, which is a good chunk. But, at least they're not going to be completely reliant on them. And they do have a lot of other ventures elsewhere.
Yeah, and it's interesting for BYD. Are they producing too many batteries and not enough cars, or is there not enough demand for their cars?
And honestly, that I don't know. That's a great question. And then I look at like Tesla in the future. Tesla would basically be like a BYD here in the US, because if any automotive makers needed batteries, Tesla could sell them batteries. So maybe that's just where BYD is at right now. They focused so heavily on pumping out batteries that they weren't too concerned, because they knew they had buyers for them. So, as a stream of revenue for them, it's great.
Yeah, no, definitely mutually beneficial.
Nano diamond batteries. I'm not even. Oh, that's the wrong one. Sorry about that. Nano diamond. I'm not even familiar with nano diamond batteries. I do not know. If you can give me some more information on that, I will have to research it myself. If I don't have an answer for you now, I will look into that. I do not know anything about nano diamond batteries.
Tesla Energy. I was bringing this up earlier. What do you think?
Yeah. So Tesla Energy. Hope everybody can hear the music. My neighbors are playing extremely loud right now.
Happy 4th of July.
Yes. So yeah, when it comes to Tesla Energy, it's going to do well. And like I said, that's basically Tesla is converting over the whole world to renewable energy. That's their whole goal. And so in the process of doing this, they're going to be expanding. And obviously the batteries constraints that they're under right now, there's only so many power walls that they can put up. Solar is still in the ramp.
Yeah.
So I think 2027 is probably the year we really start to see energy taking off. Just because Elon's so focused on FSD, getting through all of that stuff, getting robo taxis out on the road, and energy is still going to be growing all along the way. but in the time that we're getting there, it's going to take a little bit.
Yeah, they have enough to focus on, and solar is still it's a tough industry, and especially with all the materials that you need are coming from China. But I here and there I'll read the articles about Tesla's doing a virtual power plant here, a virtual power plant there. I know they've done a lot of work in Australia, giving them more reliable power because they deal with like constant blackouts and brownouts. I think that's going to be a huge impact, but I'm with you. I think it's going to be, it's going to take 5 years. Right now it's all about the cars, and they know that they want to take as much of that market as they can, and then that could be the next big
Oh yeah.
challenge.
Well, and think about how they did it with EVs. So EVs, they were, I don't want to say they were quiet about it, but for 10 years they were just creeping up in the EV market, and then all of a sudden 2020, 2021 hits, and everybody else on the planet's like, oh my gosh, we have to do EVs. So they're going to do the same exact thing when it comes to solar. They've been slowly chipping away at it, just kind of underneath everything, slowly building up this foundation for solar and renewable energy. And then eventually they're going to hit that point where it's going to click, it's going to turn over. The majority of the world, even the Wall Street Journal, I think it was predicting that, we're going to be about 40% EVs by the time we hit 2026. So Elon was predicting by 2027, we'd be 50% EVs. So if the majority of the world is EVs in 2027, that means they're going to be needing a better grid and supply of energy coming in. And now this is when it's going to take off for Tesla.
I would love for them to talk a little bit about it on the quarter call here, but yeah, I think it's a few years out to be relevant.
Yeah, Carrie, I'm with you. I'm all about nuclear, and I know Elon is too. It's just a matter of people not being afraid of it and going from there. FSD market in 2023. So depends on what you mean by FSD. So getting to level 3 autonomy basically means nothing. So there's 1 and 2. 2 are at currently right now. It's like, I would say level 2 plus really when it comes to FSD. I was actually talking to, and I know a lot of people don't like the guy, but Taylor, Mr. I'm all for Tesla, but I will bash it all day long guy. I was chatting with him over on Twitter, and a couple of guys were responding. And one guy, and I'll try to put a link in the description, has a whole entire website all set up to explain every single robotaxi on the planet right now. And there's and they're all geofenced. So a lot of them are level 4 autonomous right now, but they are geofenced. So it's a matter of, are we going to get ourselves to a point where we have true FSD on the open roads when it's not geofenced or not? So when it comes to FSD into the market for 2023, level 2 we've got now, I think we will see level 4 come out in 2023 for Tesla. And then with Tesla's robotaxis coming in 2024, my question is, are they going to have the robotaxis come out into cities very much like we currently have with Waymo and Cruise and Pony? Are we going to have that for Tesla and they're going to be geofenced to cities? Or is Tesla going to have it set up with true level 4 autonomy where these vehicles can travel and roam around? So I think we will have a much more significant version of FSD in the market in 2023 for sure. Let me see what else we got here.
Hope YouTube doesn't give you a strike with your neighbor's music.
and what's crazy is they play it from their car. It's not even like a stereo. They just have their car blaring loud.
This is a good question, Becky. That's the $1 million question. I mean, what I like to do, Tesla's just so volatile, and it could go up $200 this week. It could go down 200. It's crazy. But what I've been doing is, if I'm going to sell a call, I'll try and do it after a big spike, because every time it goes up a lot, it tends to come back down. Not financial advice. That's just how I approach it. But because I've gotten burned too. I mean, if you sell a call at the wrong time and some good news comes out this week, it's very difficult with Tesla. It's just so volatile.
Yeah. And I don't do options yet. So Vin would be definitely the guy to talk about those. Let me see what else we got here. Rob. So for right now, my long-term price targets have not changed. Usually when I get quarterly numbers, I'll bump up like the next year. I usually kind of go 4 quarters ahead for every quarter I get. So when it comes to long-term price targets, I will update that probably end of the year, unless we get something significant that changes. because usually what I do is I get my production and delivery numbers that come in, and I update all of my spreadsheets for those. And if anything changes that changes things long term, then it will update it long term. But most of my price targets are all based off of production and delivery numbers, and those didn't change too much for the year. They came down a little bit for the near term, but they're going to recoup that. So Q3 may actually end up changing it more for the long term once I see what that looks like. But for right now, those price targets are still the same. All right. Well, at this point, I don't know if my neighbors are going to stop, so we can call it a day. Thank you, everyone, for being on. This was awesome. So I'm glad this worked out well. So let me know your feedback on this, if there's anything we can do to improve it, because again, this was my first time trying to do this new live stream version. But otherwise, I hope everybody had a happy 4th for those of you in the US, and for the rest of you around the world, I hope you enjoyed your weekend. Otherwise, if you have not seen Vinny on his channel, I will put the link down in the description. Every episode that we have for a Tesla Weekly will also be down there if you want to go and be nostalgic and check those out. Otherwise, we will check you guys out next week at some point, and if we can figure out a consistent time for these, we will let you know and have a consistent time for the show.
Definitely. And don't forget to drop a like down below so we keep doing these.
Yes, definitely. Thanks, Vin. Thank you, guys. We'll see you all later.
Bye, guys.